And welcome into the Retirement Guys Formula Dividend Kings second quarter 2021 model changes review and outlook. My name is Nolan Baker. It's good to have you along with us. Of course, as we get started here, feel free to pause this and you can read through all of our disclosures. The main one is this presentation is for current clients invested in our Dividend Kings model. And, most planners think that having a pile of money and picking at it is a retirement income strategy. But really, when we look at our methodology and the principles that help drive our decisions with the Dividend Kings portfolio, what we focus on is disciplined buys and sells. We have a long-term focus, low cost, cash flow focused, and tactical defensive strategies. And what we do is retirement. So when we're reviewing the process, what we want to do is we want to identify risk and opportunities, designing the solutions with the outcome in mind, and building out and then executing the plan. Part of our beliefs and the pillars of success that we have is education. We're all about education. I'm going to share some resources here with you in a minute on additional ways that you can get educated after today's event. We also want you to know what you own and know why you own the investments. We want you to also stay disciplined. Again, it's difficult to stay disciplined when we live in a noisy society with a lot of media ultimately creating an emotional aspect, but that is going to be one of the keys to help you get that long-term growth. So after today's presentation, there are some different things that we can do. First of all, I would encourage you to subscribe and listen to our How to Retire podcast series. That series in addition, they come out each and every Saturday, and you can get that available. It's on Spotify, really pretty much every major podcast channel, and even on YouTube. All you got to do is type in America's Retirement Headquarters as an example on YouTube. Then you'll see our channel, and under the playlist, you can listen to the how-to series. So inside of there, again, we've got more insightful information. So if one of your concerns is, what should I be doing with rising inflation? We've got a radio show that covers that topic. How to invest while the stock market's at an all-time high. We've got that radio show available for you and those podcasts. So again, great ways to kind of keep you informed, keep you plugged into everything that we do. We also do put out our monthly market commentary. If you're not getting our monthly market commentary, you can reach out to the advisor who got you this information, and or you can email Jenny at theretirementhq.com to be added to our monthly distribution list. And last, if you haven't had a chance to like us on Facebook, I would encourage you to take a moment and like us on Retirement Guys Formula, America's Retirement Headquarters. Another great way to stay informed about upcoming events and other webinars and just articles of interest and things that we like to share with you, our clients. So first of all, we're going to talk about know what you own and why. The Dividend Kings portfolio, it offers three different strategies. We have the conservative, the moderate, and the growth models. And the portfolio, as you see it in today's presentation, can and does change. And, this is the target outcome of the growth portfolio and the model allocation as of July 1st, 2020. So what you can see is that, during the normal range of returns, the portfolio does have the ability where it can go up and down with market conditions. We're looking at, generating things that have good cash flow and dividends, and again, try to focus on reasonable expense ratios. So in December of 2020, on the equity side, what we did is we increased our exposure to two categories, which was daily essential companies and companies with strong balance sheets. Plus, we also did increase our exposure to small and medium-sized companies, again, back in December 2020. The highlights of some of the changes that we made back in February 19th of 2021, we had a defined outcome ETF. Now, what we can see is that we added in this defined outcome ETF back in February of 2020. And we know now, going back in time, that was right before the big impact of COVID. And you could see the kind of yellow-orange line there, the reference asset being the SPY, S&P 500 Index ETF. The quick dramatic drop that had when the market sold off. You could see how the defined outcome ETF, here being the blue line, really helped kind of protect you, the clients that were invested in the Dividend Kings model. And, we now know going forward over that time frame, the market has recovered, where you can see the blue line also recovered with the equity markets as they recovered in the last year, finished, fairly strong. So again, being able to add some defensive into the portfolio, still being able to capture some upside as the market rebounded. And, this year the theme really has been government spending's continued to push the market back to record territory, which is really why we reallocated back with that buffered ETF back in February 2021. After the recent run up that we then had in May, what we did is we started to add a little bit more into our downside protection in the portfolio. And I think, this is really important that we have as we move through the second half of this year by adding in the Swan hedged equity. So if we look at the investment philosophy of Swan Global Investments and the hedged equity strategy, one of the concerns that many investors need is they need to grow their wealth. They need to participate with equities really to kind of make that happen. At the same time, investing can be risky. So what they want to do is mitigate some of that downside risk. So this particular strategy adds in some hedge protection. So step number one is to invest for growth, as they always are invested. Passively a buy and hold approach in the S&P 500 index ETFs. The step two is to hedge against losses, and they're always hedged. So they're actively managed long-term put options purchased at or near the money. And step three is to seek additional return, and that's actively manage those option trades to make offsets, hedging some of the cost, utilizing a disciplined, time-tested approach. So again, the reason why we've recently added this into the portfolio is, again, it allows us to have that second step, the hedge against what could be significant losses, and starting to add some protection into the portfolio for the portion that is in the Swan hedged equity account. So again, just to kind of recap and highlight the changes that we made back February 17th, 2021, sold off the buffered ETF, increased our growth exposure with the philosophy of don't fight the Fed. May 14th, we swapped out our high yield fund with an ETF to lower the expense ratio. And then on February 19th, 2021, we rotated out of the NASDAQ ETF and the First Trust International Equity Opportunity into the Swan hedged equity to provide some further downside protection. Stay focused. Also, I'd say that would be the continued theme for a big part of the rest of this year. Meme stocks and digital currency really have been the hot topic in the first half of 2021. And it can be tempting to try to get in on a hot investment when the price is going up quickly. That fear of missing out is really a national emotion, but usually provides and proves to be a very painful lesson to follow. So you need to know what you own and why you own that investment. We here at the Retirement Guys Formula, we like companies that sell products that consumers use every day, because in good or bad times, people are still going to need to use toilet paper. They're still going to want to go to the grocery store, and they're going to have a beverage of their choice. The reason we pick companies with strong balance sheet isn't necessarily because the stock price will always rise. In fact, at times, even great companies' prices are going to decline. But we're picking companies with the strong balance sheets because they are much more likely to weather the storm if and when the economy turns south. So avoid some of that short-term thinking. If an investor is buying because the price is going up and they think that it's going to continue to go up, this can be very dangerous. Remember the dot-com bubble burst of 2000 or the real estate collapse of 2008. Heck, this emotional buying really, it dates back to the tulip bulb craze of the 1600s. And looking back, we know how the results turned out each and every time. So keep in mind, the market is doing great. At some point it will go down. Selling in a panic can be very painful. And again, our goal is to help educate you to be successful in your investing journey. So moving forward, I feel the Dividend King portfolio is really in great position, with some of the hedging strategy that we've added in to move through some of the unknowns of the remainder of 2021. Keep in mind that the market is at high points. We're at or close to an all-time record high as I'm making this recording. So the market volatility could occur. The market swings are a normal part of the market process. And the holdings that are put into the Dividend King portfolio were purchased for very specific reasons. So, some investors have also started to ask the question about, is inflation going to crash the stock market? And we drill down in on these numbers. It does show that inflation is picking up. This is the May number, which most recently these numbers have continued to go up with inflation kind of bumping a little bit higher. But back in May of 2021, all item inflation factor was up about 5%. And then I've highlighted there in the red area some of the areas that did see big jumps. So, we see a big rise in energy prices as an example. We've seen a big rise in used cars and trucks, and also seen a big price increase in transportation. But what this chart shows is the nominal wage growth has really been far below its target in recovery. So if we go back and we look at the top right section with the red arrow, what we notice is that you had pretty strong wage growth right after COVID, with the loss of employment, trying to get kind of people back to work. But that trend, if you look at the April and May numbers I've highlighted there in the yellow, has really calmed down a whole lot. So obviously one of the longer term concerns that I would have about inflation would be, continued strong wage growth, but it's still short to see what the outcome is going to be. But, what it does show is that in the April and May 2021 numbers, it's calmed down a little bit. So that says to me that there still could be some good breathing room for the market. Nothing to get too excited overall about. No reason to change some of your long-term plan because of these recent numbers that you have. Here we go. If we again look at the long-term growth on utilizing the growth with King models, it's easy to get intimidated when it comes to investing, especially during turbulent market conditions. The media headlines are there designed to play on your emotions of fear and greed, and it is common during tough times to sometimes second guess your decisions. But no, that's what we are here for, and that's what your financial advisor is there for. It's common that investors will want to make a change to their portfolio because they feel like they're gaining control by doing something. Just again, keep in mind that these feelings are normal. A key to be successful in your long-term growth is how an investor is going to react to those feelings, or even more importantly, not react to these emotions. And one of the major benefits of, again, working with us is each and every investor has a unique investment policy statement, which provides what is a normal range of returns in the portfolio. Again, if we look at the current growth with King's model, you can see on the left-hand side here, it has a risk score of 56, with 0 being no risk, 100 being high risk. 56 is where the model is at. So normal market conditions, it says roughly 95% of the time in a 6-month time frame, the portfolio could be down 11%, or it could be up as much as 19.8. These are the normal range of returns. And again, if you'd like a copy of your investment policy, simply reach out to your advisor or our office. We'd be happy to get one to you. But again, I just wanted to provide you a quick halfway through the year update. Again, wanted to thank you for being a client of the Retirement Guys Formula. Let you know if you still have questions, please reach out to us. If you want to know more, let's chat. We offer virtual meetings and are on standby to answer your questions.